All right, all you devils out there, happy Friday. Sam here with you. Friday the 18th, coming up on 1 o'clock here. Of course, we're looking at Bitcoin today. Now, before we get into the TA here and some of the things I wanted to focus on today, a little bit of housekeeping. So members, some of you now know that I'm going to be out for, well, I'm not sure to be honest, at least a couple of days. I'm anticipating I'll be back capable of doing a video next Friday. But I am going in for some follow-up surgery. They are rebuilding me one body part at a time. So Monday morning, I'm getting a full hip replacement, which is hard to believe, having just gone through back surgery. But I have been hard on my body over the years, and it's coming back to bite me. So I will be out. So surgery's Monday morning. I probably won't be in a position to sit at my desk till, well, I don't know when it's going to be, but probably not until Wednesday, Thursday. Hopeful to be back by next Friday, so just a heads up there. I think many of you know that. YouTubers, I'm anticipating being back on by next Friday. So there's that. Then the other thing here that I wanted to draw your attention to is this is, if you follow us on Twitter, you may have seen this. This is just going back to the 15th here when we announced this. Now we've been, a lot of my team and members are trading over on the Phoenix exchange, which we like. They're doing some really interesting things. Really a fast exchange, fast growing as well. And they're doing these trading competitions, which are kind of fun, right? And there's a real competition with real prizes. So if you're interested in following along with my team, and this is really the A-list of traders that we put together for this, you can follow along. There's no cost to do that, but you will need to join us if you're interested. There's no cost. You could join us as a free member, and I feel like I need to remind people of this every now and then, right? So I'm over here on TradeDevils.com, plans and pricing. Just all you have to do is click free, right? Not only will you get access to that, but you're going to get access to all of the white belt course material, early releases of videos. You can just go through the list here and see the benefits that come along with that. So no obligation. You might get some ideas and see how some real veteran traders are approaching that competition. So again, the link is right down here on the 15th. That'll get you into that group where you can see it. Now, if you're joining here, this will drop you into the Discord where you'll see just the instructions on how to create your account. Again, no cost, no credit card, no nothing. But all of the content is on the website for the belt system, etc. In the Discord, you will get access to the channel where you'll see their trades. It'll be obvious to you once you land in the Discord. Okay, with that said, I think that covers it. You've got the link here. Okay, let's go back over to Bitcoin. So again, no Elliott today. There's until we resolve out of here, it's a crapshoot, right? I mean, Elliotticians are going to differ here on where we are in the count. So I know we've been over it 3-4 times in a row last few weeks. And since there was fairly good feedback here on just kind of introducing more technique, then here's the latest Elliott count that we think might be in play. I thought I'd kind of carry on with that and introduce you to something you hadn't seen from us before. Excuse me. Fucking allergies. So picking up where we left off last week, as I told you I would, I mean, here's the squeeze that was in last week and no change. Right now we got a little threatened for a second to maybe get up there. You note here, I'm just using alerts, right, almost as essentially as support and resistance around this range. So we stay in this consolidation, and of course the expectation, and it's hard to find a time where it doesn't happen, right? Eventually, right, always out of this consolidation comes expansion. One thing to note, there's been a few squeezes, but not many, right? So the last squeeze we had is here, where we had, I mean, if you come here, it was a really tight little squeeze before we really launched. Oh, you got a little baby one here, a couple here. This is a bit of a fake out. But what you do see here is from this consolidation, which, I mean, even if I go all the way back here and we just look at this, from that little tight little box of consolidation came, this is fairly classic, right? Breakout traders get bent over here up, and then eventually it ends up going down. But note here, my point being, from the squeeze comes the expansion, from the squeeze comes the expansion, from the squeeze comes monster expansion. Now what's coming out of this, right? This is fairly long, and I am out here on a daily. You know, we can just eyeball it. I mean, we know bears are looking at this going, oh, there's no doubt in my mind that this is all a 4, so the anticipation is 1, 2, 3, 4, 5. And now if we resolve out of this lower, well, if it finishes as a 5, as there are many who are absolutely convinced that's what we're doing, right? If we finish in a 5, we're either starting something or finishing something. Now, if that's the A wave, could be A. Oh shit! I suppose it could be a 1 wave, but more probably that would be an A wave. Now the A wave would imply that there's going to be a retracement, right? A 3-legged retracement up here, maybe challenge some of this market structure. And if that's going to go down lower, then you'd have your classic ABC, then zigzag 535. Well, Bitcoin doesn't always do. Well, most of the time doesn't do what's easy. So as we sit here going sideways, I wouldn't make any assumptions about where we're going right here as it goes sideways, about where we go next. Let the market show you. Let it reveal itself. It will, and then from there you get out of this kind of a heads I buy, tails I sell. Now, if you have strong conviction and you're convinced that this is a 4 and we're going lower for the 5, I don't want to talk you out of a trade. I'm just saying if you're not in the market, this wouldn't be a great time to be entering for a longer term play like this as we just sit going sideways in a squeeze. Now, if you're down on the 15-minute, plenty of trading, right? Plenty of trading down, you know, at 60 and below if that's what you like. I mean, my team that are entering that competition, they're not going to wait for the daily to break. They'll be down on the 3-minute, 5-minute, 10-minute, 15-minute. There'll be plenty of trading down there. So you won't suffer from any boredom if you're following along. Get this out of here. All right. So all that said, as we sit here just watching this, and I mean, we could drift for a while. I mean, really, we could go. This could be weeks, right? As the market kind of bases here now. Oh, yeah, Wyckoff traders are looking at here, and this is, you know, kind of the mixed blessing here. It's much like an Elliott count, right? In a Wyckoff accumulation here, is it accumulation or distribution? Well, I mean, I'm not a Wyckoff expert, but as I look here, I mean, I don't know how you would tell, really, right? I mean, the pattern is pretty classic. But while you're in this phase here, so certainly Wyckoff traders are gonna look at all of this as just as distribution. I'm kind of a sloppy draw here, but as distribution. Now, is this additional distribution to week longs before heading down? I mean, it's very hard to make that distinction between the two. Is this reaccumulation before we go higher? Now, just the supply demand dynamics. And everybody here knows I'm a bull, so what I see here is just reaccumulation. Now, of course, I could be very wrong. As I try to remind you guys, I'm wrong often. I also remind you, you do not and should not have as your goal to be right more than you're wrong. You're setting yourself up for disappointment. You do not need to be right more than you're wrong to be profitable. But you do need good money management and good risk-reward trading so that when you're wrong, you're losing much less than when you're right. That's the secret of trading that nobody really wants to face. And I understand it's just human nature. We hate to be wrong. I hate to be wrong. But I know I'm coming almost 30 years of doing this. It doesn't ruin my day, right? I mean, everybody hates to get stopped out, right? And everybody hates it. But it's just the nature of trading. It's just stops are the reality of trading, and you need to turn it from a negative into a positive, right? You get stopped out, okay, well, pat yourself on the back. You're using good money management. Now, if you put your stop, you know, if you did a 1 to 3 risk reward, well, maybe rethink that. But if you're using good money management and you're letting your winners go and being disciplined about not moving stops and having a consistent money management plan, do not worry about being right more than you're wrong. That is not the name of the game. The name of the game is to be profitable. Okay, let's. I'm trying to keep this relatively short. So we sit going sideways. Let's see here. I've got this kind of teed up in order. All right, so let's come out here looking a little bit longer term. So this, right? Because so no surprise, right? I'm gonna have a set of median lines on here. So it's interesting here as we sit hovering literally at the median line. So this is very common, right, for the market to, if you studied any of Andrew's work, this is trading principle number 3. We're going to hover around the median line while the market makes a decision here. Are we going to break and go towards the lower parallel? Are we going to pause here, consolidate, and head back up towards the upper parallel? Well, right now we've yet to get even a touch of this upper parallel. So again, it's how would you know here? Well, out here on a weekly, we've certainly got good distance from the Vegas wave. You're sitting right on the, I mean, you know, this isn't that hard, right? Say, okay, well, here's the prior consolidation. As we sit here, I don't think you want to assume anything. You know, bears are just assuming we're coming down here. We're going to touch. We're going to hit that. They're just assuming it. Now, you know, one thing to post something on Twitter. It's another thing to put some muscle behind that and put your money where your mouth is. I'm not suggesting that everybody on Twitter is full of shit. I'm not. But you know, show me your trade now. Show me that you're short, right? And then when you hit your target, okay, good for you. I'm not long or short here. Let me rephrase that. With trading Bitcoin. Now, holding Bitcoin, that's a different story. But trading Bitcoin, I'm not taking new positions here. I want to see how this resolves. If I am trading, I'm trading relatively shorter term stuff, which I'm going to show you today. Is kind of something very popular with FX traders here that I haven't really spent any time on before, so I thought I'd use today since we're not doing anything. Do a little teaching. So as we sit here, now there's the weekly. Well, let's go through them one at a time out here on the longer term. Well, now you go down to the 3-day. We dance on the edge of the Vegas wave here. Well, that gets my attention. So, I mean, on the daily, people are like, oh, man, we're below the Vegas wave. Well, okay. Yeah, we are. 3-day, we're above the Vegas wave. And we've just tapped the 144 twice. Okay, right. So I wouldn't read too much. So if you're a bull, you're going to say, oh, that's bullish. If you're a bear, you're going to come over to the daily and say, see, we're below the Vegas wave, right? So careful there. Right now, this could go either way as far as I'm concerned. But out here is kind of interesting as we hover here. It would certainly not be surprising to see those wicks get tested. Now, it's been rejected 1, 2, 3 times. A final test down here would not be terribly surprising. And then, you know, it's kind of the classic thing that we talk about in terms of a lower risk way to approach this. If we're going to come down here, if we are going to test, I mean, nice risk reward, right? Back to where I just started. We're talking about risk reward. Okay, well, right there. Right, you're risking this much to make that much, right? Well, here, let's just use the structure here. Let's do it this way. So let's put this up here. That's a reasonable target here. All right, we'll get into some other technique here in a second. But so if I tee that up on a long, right, this just makes sense. All right, let's use that as a target. This is a stop. Okay, there's 6 to 1. So if we come down here and we get a little pivot, and you like the look of it, maybe on a smaller time frame than a 3-day, that's just the kind of thing you want to look for. Now you could invert this and do the same thing on the way down and say, oh well, I'm a bear, right? So why are you always showing only bullish setups? Well, I'm a long-term bull, that's why. But so I'm just making the point here. As long as you're getting 6 to 1 approximately, or even 3 to 1, if 3 to 1 will do it, right? If you're getting 3 to 1 on your trades, well, you can absorb some losers here. This is not difficult, right? That's not hard to figure that out. And I don't know that I'd be sitting here with a limit order. We'll look at maybe a way that you might approach doing that. But if I come down here and I see this react, and we come down here and we react and we start to come off of that, well, I'm interested, right? Just because of this, right? So maybe partial at 3 to 1, you got a runner going 6 to 1, right? That's how you offset a whole lot of losers, which you're going to have. So just get used to it. Don't fight it. All right, let's remove all of that. All right, let's go. Let's go to the daily here. How do I got this here? I've got this over here. Here's a daily. All right, I'm switching over. Oh, now we're on Bybit. We've got a lot of members trading on Bybit here. Like them, good volume. Okay, so now I've wicked off a couple of things. So what I wanted to talk about today is order blocks. Now this is some of you may be familiar with this. It's a relatively simple concept, but it was really pioneered by FX traders and popularized. Fairly well-known educator and trader. If you're in the FX space, you'll know ICT. Well, he's really popularized this, and it certainly is applicable to other markets. My thinking has always been the reason that this was developed is because FX traders don't have access to volume data. So sure, they can get tick volume, but they don't have the same volume data that we have in other markets. So I think this was an attempt to figure out where market makers and institutions were grabbing liquidity before they moved the market in the other direction. So it's a relatively simple concept. Now, I'm using a little script here to wick these off here to make it easier for you. At the end of the video here, I'm going to show you the script. Just if you're new to this concept, and it's a simple concept, but if you're new to it, there's a little nuance and there's some subjectivity in terms of where you're identifying your order blocks. So this is a nice little vehicle to kind of guide you while you're getting used to doing this, and unless you've already been doing it and you're familiar with the concept. If so, well, you can probably leave now. If it's new to you, well, take a look here. This can be worthwhile, particularly as we sit here in a range like this. Now, what I've done here is white would be a bullish order block, blue would be a bearish order block, right? That's the way this little script will run these for you. And while there's different ways to do this, let's see. Let's go in here and look at this one, and then I'll demonstrate here. Okay, so this can be an order block can be let me take this off here. Let's get out of our way. Okay, so an order block can be identified a couple of different ways, and pardon me. What I should say is noted and your support and resistance drawn a couple of different ways. So all we're doing is trying to identify potential areas of support and resistance, just like we would with a volume profile or just market structure. We're trying to identify where the last movement of significance here prior to a move that moves away from the order block. I'm not sure I said that the cleanest way. Let's use this one. This is fairly decent here. So we have a down candle here just prior to what is a substantial move higher. So this coming out of the order block, we get this move here. So the assumption is that smart money would be here trying to grab liquidity before running it up. So when you're just eyeballing and you're looking for it, what you're looking for is the last candle in the opposite direction prior to a significant move. So this one here is notated, and the way this script is doing it, and again, it can be done, you have to do a little trial and error, see what you like. Now, some people will do it just body of the candle, right? So if I were to draw that, okay, so there's your order block, all right? So it's the last time we see a negative candle, a red candle prior to the market making a substantial swing. So this is a good candidate as an order block. Now, this particular script does it, it's kind of interesting the way he's written this. We use on a bullish order block, we use the wick low to the body high. On a bearish order block, we would use, well, you can make a case, you've got another one here. All right, this is your in fact, that would be one. So people might bicker on that wick, but so we have the low here and the high here. So here's the order block. Now this one, in fact, actually fails, but we'll look at many examples. Right, these are not guaranteed to hold. Right, just like nothing in the market, but you will find that this is very consistent, and you'll find some good trades off of these. So this one here is the script is identifying here. It only goes back so many, so we'll focus on this one. Let me pull back a little bit here and get this one dialed up. Okay, so let me zoom in there, and I'm going to draw this with here. We'll do it this way. So there's the order block. If I get it right on that. Okay, let me zoom out a little bit. So last down candle before we get this meaningful swing. The idea is that when you identify the order block, once we push away from it, a return to test the level of that order block is highly probable. It's not always going to happen, but here's a fairly decent case of it, right? So we come down, we test it just on the edge of it, and you'll find it often there can be a slight front run there. It'll do one of two things. It'll either come down here. Oh, come here. It'll come down, and we'll get into it, and the midway point is marked as well. And I'm going to show you with regards to targets how to do that. But it would come down here and quickly reject. What you don't want to see, and what would be a kind of a heads up that we're that the order block is likely to fail if it comes back here and it just kind of waffles and you're getting a lot of wicks on either side of it here. That would be a clue to get out. What you're anticipating is a quick test and rejection. So here being a good example. So if I were to, oh, here, let's do it this way. I can bring that back. All right, so if I use the replay and I go to right here. Okay, so the order block is identified. Now, I'm just gonna, well, here, let's just go forward here just a little bit. So we'll just go one, okay, so we've got the order block. Now, there's nothing to do here. What you're looking for is a reaction at the order block. So as it comes down here, when it comes down, I get these down. Now, your head's up here. Now, this one, you just, if I get that up right on that edge, right on it. Now that's like that's maybe a tick off of it, maybe 2 ticks. Just misses here, but look at the reaction. That's a fairly good example of what we're looking for. Now that doesn't mean we're off to the moon here. In this case, right, eventually we roll over, but that's the trade right there. Now there's a couple of different things you can use, and I'm just using a variation of the wolf range, which you guys have seen me talk about before. So let me get this up here and I'll show you what I'm using here. So this is order block with targets. Okay, so there's a couple of ways you can do this. Now, typically with the wolf range here, I would just have the 50 and then we'd have our 100, 200, and 400 out. Now here, the only difference is I've got the 50 noted, but then I'm using the 1618 as a stop location. So if I bring this back here and just put this around that order block, right? So here it is on the low. Okay, if I get that right on there. Okay, so the 1618 below this becomes your stop, so it has a built-in stop. So you can see I'm just going just beyond 50%, so I'm going to the 1618. So I'm giving a little bit of a room here, particularly in crypto, where you can get, you know, maybe a little some slippage, some liquidity issues, maybe some over-leveraged traders are getting hurt there. Again, remember this is a daily chart. So as we come down here and tag the top end of it, that's a potential entry for you. And the idea is, now, even though these are here, the trade is on the other side of it. So once we touch it, the first target is 100% of the range of the block. Second target is 200%. Third target is 400%. Now you're not going to get them every time, but getting 200 is the one you're looking for. Now here we only get the 200. We don't get the 400. We get close. Pretty close, right? Oh, we do get it, right? So you get just to the 400, right? That's it. That's our all-time high. So if you were taking this off of the touch of this order block, you got 100, 200, you got your 400. So you got the whole move. Now let's go back, right? We're talking about, right? Don't have to be, you're not every one of these is going to work, right? Plenty are going to get stopped out. Now here, if I'm right here on this, that's not good enough for me. I would be a little tighter on the stop because I want at least 3 to 1, right? So that's pretty damn close. So I'd be right there. I might have brought my stop up just a hair because I want to. If the 400 is only giving me 2 to 1, I might think twice about it, or I might be quicker to get out, not pushing so much. Because if I take the full stop here, I don't have, even at my highest target, I'm less than 3 to 1. So bit of a judgment call for the individual trader. Just judgment call. Now, if I like the trade enough, I'll just tighten up the stop, right? It's just trader's choice as to what you're comfortable with. That's how I would approach it here if it's a little beyond, if I can't get 3 to 1 on it. Okay, so let me, here, let's get rid of that. And we'll go back to real time. Okay, let me show you a couple others here, and then I'm going to show you how to make this very easy for you. Okay, so here's a bearish order block. So let's identify this. Right here. So if I zoom in there, right, we're using the high and the candle low. Right, so bearish order block. So you can see what happens here. Once we come down here, we come down, come back to retest, we get into the order block. Now I start here, but now if I put my targets and my stop on this, all right, I do it like this, right, you would have been stopped out right here. So now let's just do the P&L on that again, because this is important, right? I want to stress this to you. If that's my stop, oops, oh, I got wrong side. I'm so used to being long. That's my stop. That's my entry. There's my stop. There's my best case. My absolute best case target. Okay, so there's 3.68 to 1. So if I come in here and take that short as we come back out of it, well, I got the 100. I got 100 the length of it. I didn't quite make 200. Now we're back up, right? If you get stopped out of there, well, okay. Well, I was after 3.68 to 1. This might be an area for a partial, right? If you were staying on top of that. That's a little shy, right? I mean, it's not, a tick. And we're on a daily, so that's, that's probably a couple $100 there. What do we got there? 100 and I'll call it $200. Stopped out. All right, let's keep going though, and then we'll take these down to smaller time frames. Then, oh God, I'm already at 25 minutes. Then we'll wrap this up. Okay, here's the next bearish order block here, and I'm doing all this on the daily. Of course, you can do this on any time frame. Here's the next one. Let's look at this one right here. So we're going from here to here. Let's draw it out. Okay, so this one here, this is the last order block. Now note, it's the last up candle before we head down. Remains untested. So should we come back up to that, let me pull back out again. That's the next area of potential resistance as we think about if we're gonna do this, if we're gonna start coming up here, that's the area you'd be looking for a reaction. Now it's not always, it doesn't mean it's trend change, it's reaction. So if we bring it across, tee up those targets. Right, now look at, right, if we come back, if we come back to this, this is where you're looking to get short. So this would be your best case in terms of well, I mean, you don't have to get out there, but that's a reasonable target. So if we go back to a short for that entry, and this being your stop, let's not assume you get the 50. Sometimes you will. So there's your target right there. So that's not quite 3 to 1. So judgment call. Either you're going to go for more to get it to 3 to 1. Right there is 3 to 1. Or you're going to risk less. One or the other. Right? You're, again, trader's choice. So if I bring it to just to the other edge, to the high of the order block, I got 3.2 to 1. 3.21 to 1, excuse me. So looking for that move right there. Now, again, you don't have to get out, but if you hit 400% of the order block, that's a reasonable spot to at very least be trailing a stop. So if you're after more on the runner, that's not a bad place to at least tighten your stop. And look for structure here, a prior swing here, a lower high, something that you can use for that, to trail that stop that's strategic, because nothing says this couldn't just keep going. I'm just giving you initial targets to consider. And if you broke here and then you had a little retrace here, there might be another order block in here that you could work with if that comes back again. So they will repeat over and over again. So let's look at them on some smaller time frames here, and then we'll wrap up, and I'll show you this little script that'll make it super easy for you. Let's get that off of here. Okay, so there's order blocks on the daily. Well, let's just go down, let's go to an 8-hour here. All right, now we get a whole lot more. So looking here, this has yet to been hit. Looks like that could be close. That'd be the next one up here. If we come back up to that, this one looks like it already got hit, and well, it looks like we had a little bit of a winner here. So let me get this out of here. So here's the order block right here, right? So that's the last red candle. Sure, we have wick that goes through it, but as we head up, I want to get right on that candle high. Again, I'm going to show you this will be much easier. So here's the trade. Now you don't get to target here. So you get up, we come back into the order block, we get a move out of it, but ultimately rolls over. So if you had that whole sequence on there, like that, no, here it goes right to the 1618 would stop you out. All right, so loser. Well, again, up to the individual trader here. So we go into the order block, we get to the first target, we get 100%. But if your stop were down here, maybe you're taking a partial here, but note where the next one is. It would be at the next order block. All right, so when you see something like that, if this is having done this, come down here and then gone up here, right? If it pauses here and goes again, that would be the next target, but there you're anticipating some resistance. So there you're using a couple of order blocks together for potential targets. Now, is that enough range for you? Well, that's individual trader's choice. So let me pull that off here and just keep going, and then I'll show you the script and we'll wrap it up. Okay, so let me get all of this off of this. All right, so let's go to a 4 hour. You're gonna have a whole lot more on the 4 hour. All right, so since I've got so many here, let me show you this little script here. So it's just called Order Block Finder. Again, I don't know this guy. I don't know who put it together. If you just search, it's a free, publicly available, kind of handy. So let me put this on here and open it up for you. So let's go back to our reset. Okay, so let's put that back on there. Order Block Finder. It's dark theme. There's a few parameters in here. That this would just be the relevant period here. I wouldn't go, if you go too far beyond 5, you're not going to see too many. If you go too below that, you have too many. 5 is a good starting place as you learn the technique. Well, it's not complicated. And then here, this little script is doing it for you. So as we look here, here's the last bearish order block. Now I'm down on a 4 hour, so note what happened here. So here's the last order block. So it's the last up bar, right? The assumption being they're grabbing liquidity here before they take it down. Now, if we come back and retest it here, now note this little script will give you the 50%. I'm putting on the 1618 just for stop placement and then for targets. But here's exactly what we're looking for. We come down, we come back into that area of that order block, and then we head down. excuse me. So if I put the full suite on, all right, so here's our, get it right on there. All right, so here's 100, 200, 400. All right, you got all your targets here. I mean, of course, you could let it run. Okay, look what happens. We come right back up. Now, you can make a case here that you could trade it again because it's established here. But if you hit 1, 2, and 4 on the revisit here, you better really like it. But indeed here, if you just were to slide it over here, we get 200 again. Now what happens next? Right here on the 4 hour, we get a bullish order block. So if I zoom in here, here's our order block. Look where we are right now. So I could do this a couple of different ways. Let me just get this drawn out here. Oh, I've got a template here. Buy zone order block. Okay, so I know I've just ticked the wick high of it. That's good timing for this. And it looks to me like I'm coming down here in a 3, right? So it looks like I got a nice 3, right? You can buy it right now. Literally right now. By the time you're watching this video, we don't know, but let's tee it up, right? So if this is my low and this is my high, all right, here's my stop. All right, that's 1618, the range. All right, and if you're having trouble with this, right, if you join us, right, of course we'll give you all this. So here's your stop, here's the order block, here's the 50, right? Now this is kind of highlighting the 50 for you. So having just tagged that, here's my goal, here's my target, 1, 2, 4. Which will put you back up here into the context, into the range of the prior order block. Now you might look down here and say, okay, well, do I have anything else down here? Well, we're getting a little hot down here. We're getting a little oversold. And again, I hate using that term, but we're approaching getting below 30 here. So if we go below and then circle back up, that might be one more just confluence point. Wouldn't be bad to see the MACD roll over and head back up, but you're literally right there at a buy point right now. Now remember, as I said when I started, you don't want to see this hover around here you don't want to see this. So here's a good example, right? This is not what you want to see, wicking on either side. You don't want to see that. You want to see a quick hit and rejection, because the assumption is the smart money here is often the implication is that smart money took it down before taking it up. The smart money is going to defend here. So as we come down, we literally just tick it. You can already see the little reaction there. So order block reaction. Now, does that mean off we go? Well, remains to be seen. But if you're looking for trades here in this kind of, consolidation as we just going back and forth here, this is not a bad way to do it. Let's see what our risk reward would be here on the long. So if we're taking it right here, that's our target. There's our stop. 2.5 to 1, not enough. So I might come up to 3. I would use 3 as a minimum. So something about like that. I want at least 3 to 1. There's 3.01, right? So you might have to give in a little bit. This is a guideline. Now, if you've got a giant order block and this really gets wide, then this may not be the appropriate stop for your account size, or you're going to have to reduce the size or go for more targets. This is just a good starting point. 1, 2, 4. If you get that reaction. Again, we're not trying to shoot for the moon here. This is more of it's not quite a scalping technique, but you're not looking for big moves. If it comes back down here, you might be anticipating, you're looking for the next order block. So if it gets down here, if you get that target, well, you know, well, how about we say it this way? If you get to 2, that's not a bad time to move your stop to break even. Right now, if it's going to keep going to 4, all the better. Well, now what have you done to your risk reward? Right now, it's just, you know, nothing but upside here, or you're going to scratch. So this is a good measure. If you get to two of the order block, tighten your stop up. It doesn't have to be to your entry, but reduce the risk at least. All right, let me get this off here, and then we'll wrap it up again here. I just show you we can just keep going down here. All right, it works on every time frame. All right. Now here's one that looks like it's in the process of failing. That's a baby one, little tiny one. You may or may not want that, right? So here's the last upside. Here, pardon me. Here's the last bearish order block before heading down, right? Again, just conceptually, it kind of makes sense, right? Here's the upswing here. Remember, we're using the pivot high and the body low, so that creates the zone here. So there's the bearish order block. Now, is there a trade here? Well, right now, we're just dealing with this little micro order block here, as that's the last low before we went up on this big run. Are they going to defend it? Well, that might be too small, so you look at maybe go to a 2 hour. It's just as small. Oh, back to the 4. Right now it looks a little bit better. So, you know, you got to decide. If you start going down too small, if they're too small, you know, I don't like them as much if they're that small, because the target and the potential reversal zone is so small, as we were just looking on the 60, and the potential for it to fail is too high because the range of the bar is too small. Can be, right? It's just a little nuance, and that's trader's choice. So as we sit here, right, that's a reasonable spot to be a buyer. Now, in addition to that, we certainly don't want to forget our old buddy here and get a measured move on that. Now, how would that order block relate to what we know is the dominant algorithm in the market? Well, lo and behold, look where that order block is, right between the 50 and the golden zone. So one more point of confluence with regards to a place to be looking, considering along. Okay, so I'm right in my buy zone. I don't have the turn yet. So it might be too soon here. Again, this is up to the individual trader, because this is not something to stick around for long. If we start doing this and we're doing this, out. It should be quick. That's kind of the hallmark of these. When they're good, it'll come out of there relatively quickly. Right? We shouldn't hover. It shouldn't do this. Shouldn't do this. Shouldn't do this. It should be quick in and out. Boom, just like you like it. So if you're long, that's exactly what you want to see. So you don't have to wonder, oh shit, do I stick around? I don't know. Do I stay? You want to see a V reaction out of this. Here, like that. Right? Great example. Right? Hover. Okay, you're a little bit, but get me out of there. Right, you don't want to see this thing hovering for long. Right, now that, we got 3-4 bars, okay, but now eventually, once that starts to go, I wouldn't be panicking here. I might tighten my stop, right, because I'm not getting the quick reaction here. But I might reduce the risk just a hair, right? I may not go all the way to the 1618. I might bring it down just on the other side of the order block, pivot high, just to reduce that risk if I start to get a little uneasy with that, because you probably look at this and say, could we be going 1, 2, 3, 4? We're going to go into a diag. So if you're uncomfortable, right? When you're uncomfortable, it doesn't necessarily mean bail. It means evaluate the price action, right? And so as we sit here right now, is there anything here telling me that it looks like I'm going to get a good reaction? Well, that is a 4-hour bar, and I don't really have anything here yet. Now I've just gone. Oh, it just looked like it was just triggering here that little green, and we're going to go below 30. So if it's going to turn out of here, great spot for it, right? We know. So you could do it this way. You could do the long here and use your algo targets, right? Just under the 65. Right, there's your algo target. Now you're getting 6.48 to 1. So I'm just giving you an alternate method with regards to targets. Oh, all right. So here being the first one and looking at how that would relate to what we're more used to. Okay, so here's 400 at the pivot high. You can keep these going. You can go to 400, 500, 600. There's the one that we know. Oh, and then putting the two together, I wouldn't be long before I did this. If I'm going to pivot right down here, I don't have it yet. Well, now I've got multiple targets. So coming out of here, if this holds, right? It's always a question as long as this holds. Well, right to the median line, there's my 400. right? If I'm going to keep going and I'm going to get the negative 23.6, you know, I may get there this way. Swing, right? So just the market structure stays consistent. So we double top here, retrace, come back to prior structure, a previous order block, tag it, up we go. I think conceptually that should cover it. Again, it's a relatively simple concept, order block finder. Again, I don't know the guy, but he did a nice job with it. But just one more area to look for, one more technique you can use, right? And many of you know that my partner Monte Crypto, if you come in, he's my team leader on that FEMEX competition. A big advocate of this. He's not an Elliott trader, but support and resistance is his specialty, and some unique ways that he approaches fib pulls like you see me do here. So if you're interested in this kind of approach, that'd be a great way to learn this, right? A lot of people really, this is all they do, is just look for order block trades. So just another way to approach the market when the Elliott is not helping, as it's certainly a reasonable argument that it's not giving us any insight into where the market's going next. This is another way to approach the market that kind of stays consistent with what we're doing here, which is looking for that good risk reward, looking for technical confluence, looking for that basic market structure. Do we get a higher low, higher high? And what are we doing here? I don't have a lower low yet. So if the market structure stays positive here and I don't get a lower low, well, then this is a reasonable spot to be looking for that entry. All right, guys, there you go. That'll give you something new to play with, something to chew on. What I'd suggest is if you're going to have split your, you're going to have something like I have here, where you've got 3 of these. So you might have one over here with order blocks on whatever time frame you like to trade, and then I'd go up. So I might have an hourly, a 4-hour, and a daily, or a 15, 1-hour, 4-hour, whatever your preference is, and then watch for this kind of reaction. It's just another way to approach support and resistance that's founded in some technique here that you'll find is very consistent in the markets. All right. Okay, guys, there you go. That'll give you enough to chew on over the weekend. Hopefully I'm back middle to tail end of next week. I'm counting on being back next Friday. So with that, I wish you guys a good weekend and a good next week, and I'll be talking to you next Friday. All right, guys, take it easy.